Welcome back. I'm Rick Barnett with Barnett Financial and Tax. You know, when people think about retirement planning, they usually focus on how much they've saved. The truth is, what matters most is how much of your savings that you actually get to keep. And for many thriving professionals and retirees, taxes are the biggest surprise waiting around the corner. Today, I want to walk you through some of the most common tax surprises we see and how proficient retirement planning can help you avoid them. Surprise number one, taxes don't automatically end when you enter into retirement. First up is one of the biggest misconceptions in retirement planning, the idea that your tax bill will magically shrink once you stop working. For many retirees, that's simply not the case. Social Security benefits can be taxable, and for households with pensions or rental income, retirement can actually mean more taxable income, not less. That means without proactive strategy, taxes can quietly erode the income you've worked decades to build. For surprise number two, let's talk about the required minimum distributions. Once you reach a certain age, the IRS requires that you start taking money out of tax-deferred accounts like IRAs and 401ks. Whether you need the income or not, these withdrawals are taxed as ordinary income. In retirement planning, this can create a domino effect. Higher taxable income, more of your Social Security income being taxed, Medicare premiums increasing for higher income earners, and the potential loss of valuable deductions or credits. This is where coordinated tax planning becomes totally critical to your overall financial and retirement plan. Surprise number three, the hidden tax cost of safe accounts. Next is the myth of feeling safe. Many retirees feel comfortable knowing their money is in accounts they've used for years. But familiarity doesn't always mean efficiency. Among other surprises, traditional IRAs and 401ks can be tax heavy in retirement. And brokerage accounts may come with capital gains exposure that you weren't even anticipating. Smart retirement planning looks at where your income comes from, not just how much. The bottom line is, tax diversification can be just as important as asset diversification, and in some cases, even more important. Last but not least is surprise number four, and that is no coordinated tax strategy. Let's look at one of the most common and costly mistakes we see. Disconnected retirement planning, meaning people often work with professionals who focus on one piece of the puzzle. They work in silos, we talk about it that way. Investments are over here, taxes or other tax persons over there. Insurance may be somewhere else. At Barnett Financial and Tax, our mission is to provide a holistic approach, something we call the Barnett Advantage. And that's to make sure there's no uncertainty in retirement planning. That means we're aligning the tax strategy with all the facets of income and planning. So every decision works together, not against you. Our Barnett Advantage plan is built around creating reliable retirement income while driving taxes down to the lowest possible levels now and in the future. The main point I want to leave you with today is that taxes are not a side issue in retirement planning. They're central to it. The earlier you understand where future taxes may come from, I think the key is just to partner with a professional who has all of these things under one roof to make sure that the income and the investments and the taxes are all working in harmony, because the more options you have to reduce surprises, the better you'll be able to safeguard your lifestyle. If you're approaching retirement or already there and you want a better understanding how your taxes may affect your income, then you want to be working with a fiduciary-focused firm like Barnett Financial and Tax, and that will make all the difference for you. If you're interested in scheduling no-cost phone call or a visit with us, call us at 1-800-425-7044 or email us at myteam@bftwealth.com. Thanks for spending a few minutes with me today. We'll see you next time.